Hello, everyone. Welcome to today's session. Let's jump right in here. Let's talk market conditions. Seeing mildly bearish still in this bull market, seeing some uptrend. We've been bouncing off of some of these retracement levels, and we'll talk about that, kind of where the market is standing currently. Momentum shifting or attempting to shift outside of that range bound location and back up into that bullish buy zone. And Brett, kind of stuck right here in the middle with not moving real strong one way or the other. We were down, pretty deep into these extreme ranges. Buy-sell ratio gave us a pretty extended move to the downside. Sentiment still real bullish right here. There's just no fear in the market. That's what that indicator is telling us, at least as of now. Buy-sell ratio curling back a little bit yesterday. We saw a move back to 1.46. So still positive, still above 1. Which should still continue to give us a little bit of bullish bias at these levels. And then also sentiment, we're back up above 50. We're at 60.98. Also adding to that confirmation of the trend. If we just draw this line all the way across that 50%, this also can act as a good trend indication. Are we uptrending or are we downtrending? Are we below that 50% or are we above it? Okay, so we've ticked back up just a little bit here as well. So really across the board, we do have that mildly bearish, mildly bullish stance, just because we've bounced off the lows, we've rallied pretty hard, and now we're kind of stuck right here in the middle with a few of these other indicators currently. Now the bond yield curve, I typically will skip over that just because we talk about this, I don't know, maybe once a month, because it's such a slow moving indicator, and obviously is not moving a whole lot here as well. We know that the Fed has not done anything with interest rates, and so we're not going to see this move really at all until that starts to happen and the front end of that yield curve starts to drop as interest rates start to move lower. So that has yet to happen, and we've talked about the ramifications of where we're at in the current trend, being at the top of this rally right now and still having an inverted yield curve. Typically, in the last, since the 1950s, I believe, was the number that an inverted yield curve has always led to a recession. So I also saw some stats though that increased oil prices, a lot of times increased oil prices happen at the same time as a inverted yield curve. So you get these, it's like these studies sometimes where it's like, eating eggs is going to kill you. And then it's like, well, the people that are eating eggs are also smoking 10 packs of cigarettes a day, yet they blame the eggs that are going to kill people. So it's sometimes the correlation between what's happening in one area and what happens in another, a lot of times in the financial world, we're trying to find information that may or may not be there. So what's leading, but we certainly know that high interest rates are designed to slow the economy. The whole point of high interest rates, short-term high interest rates, are designed to create recession. So it only makes sense that typically follows. It's a slowdown. It's designed to slow the economy, and a recession, just think of the term. It's just a retracement. It's just a slowdown from too hot of a pace. You get too hot of inflation, and really starts to create some problems with really across the board, just the cost of goods and services. Even this morning, I went to breakfast and three slices of bacon are $4. Like, good grief, that's what are we gonna get to when everything is still inflated? So we're still feeling a lot of those things, I think, as consumers as well, and so we may be dealing with this, I think, for the rest of this year: inflation and interest rates and higher prices, and car loans and home loans, and just the overall interest rate scenario is going to continue to be a discussion point. Let's look at indices. We're seeing buy-sell ratios here start to increase as well. Let's see, S&P 500 1.49. Let's see if there's anything that's really standing out. Utilities, we know that utilities has just been screaming 13-1. Almost every one of those utility stocks are to the upside. And really, that's really been one of the composite. Seeing some strong names here, 28 names in this group. Let's take a look at some of those. So you've got GE, which is had some volatility here. You've got Kirby, transportation, shipping. You've got Delta Air, which has had a real nice continuation of that overall uptrend. So, some of these names, Goldman Sachs, Union Pacific, Rail, you've seen Rail starting to light back up here a little bit as well and reverse and come back into that upper momentum zone with some trending patterns here as well. These are great places to start, as well to look for what are big, companies that are working. Now, the rank over here, in most cases, you get a stock like Apple and it's got a rank of 64. Well, why is that rank so low on Apple? Well, the reason why is if you look at the last 1 year chart on Apple, let's go 2 years even. Okay, the rank is based on the most recent 12 months performance, but even more so, 40% of this rank is the price performance of the last 3 months. Okay, so if you have the last 3 months basically right here or thereabouts, and this has been the price pattern, you get a big run up from Apple, you get a big retracement, you get a big run up, you get a big retracement. Well, that's not consistent enough performance that this rank is going to stay very high. So yes, we know that Apple is an amazing company, but the current rank, the current quarterly trend rank is what this is factoring. It's not factoring in everything else that Apple is in terms of that number. It's just simply saying this stock has not been trending as aggressively as others. There are other stocks that are outperforming this by a lot. Okay, 40%, 35% of all of the market is outperforming Apple. That doesn't necessarily mean it's not an opportunity, because you got to start somewhere, right? And so maybe there's an opportunity where you get a deep retracement. It's been volatile, and then ultimately it does move higher. The problem we run into with stocks that start to be like Apple and others that are like it is we run into this number right here. Okay, that is 2,786 million. Okay, that is 2.7 billion, I should say. It's 2.7 trillion in market cap, which is 2,786 billion. Okay, and that's huge. That's humongous. So can Apple grow? How can Apple grow from 2.7 trillion in market cap to whatever higher? I'm not saying it can't, and it probably will. And these numbers are going to start to be small at some point in the future if we continue to run this way. But it's just hard for these large companies to grow as fast as other companies. So they start buying other companies up. Apple's going to be at that point where it's going to be tough to continue to accelerate, but they've got a huge amount of cash. It is like a really excellently run company, but they're just so big and they've got competition, and they've just got a target on them all the time. But that's one of the reasons why the rank on that is a little bit lower, is because you have some volatility in the short term on a stock like that. American Express has really been moving nicely here lately. I've still got it on that 2 year time frame, but you can see that uptrend just in the last 1 year. Let's go to the last 6 months, American Express. So that rank, you see the rank here is 87. It's because this last year of time frame has had very little volatility, a little bit, but it's been continuing to improve over time, and more importantly, the most recent quarter and the most recent year, so the most recent 12 months. So typically a higher rank stock is going to provide us with the stock chart that we're looking for already. So it helps in the scanning process, and that's why all of the scans here are sorted by rank. Okay, if you go to just about any scan that we have, it's sorted by the rank, so that it's pulling in those highest performing stocks first. Then from there, there's oftentimes a lot of them, and we can add in other criteria. SkyWest, for example, who would have thought SkyWest would have a rank of 98? Well, look at that stock chart. Okay, that is a beautiful uptrending momentum style stock chart. And look at the fundamentals. This is, it's like whatever these guys are doing, it's working. And so we want to find that we want to find one of those stocks, and then ideally we catch one of these stocks as it's coming back from a hold to a buy signal, still within that overall uptrend. Like right here is a good either initial entry or re-entry, and Also here, when it goes from that yellow back to green or that hold back to buy, can oftentimes set up. That's one of the screening criteria is a stock that goes from a hold to a buy. So when you're looking at most of these, in fact, I believe all of these are also set up to go from a hold to a buy. Actually, muscle stocks are not. Muscle stocks are if they're a buy signal only and the rank, okay, buy rated stocks versus the new buys, which are from hold to a buy. Okay, so you're getting opportunity. The nice part about that is you get opportunity to find stocks that otherwise you may not be familiar with, or it's like, oh, here's a stock that I've been waiting on, or I may consider it and allow it to, and then add it to my watch list or make a trade on it. Just because there are so many stocks and there are so many things to filter through and go through, that it just makes it a little bit faster process to be able to analyze and know what you're looking for versus a lot of traders and investors are like, I just don't even know what stocks to look for. It's like, well, I shop at Home Depot, so let's look at Home Depot stock. Okay, I like Home Depot, but it's in a downtrend and it's a hold signal currently. Should I be buying Home Depot? No, not yet. At least based on our methodology. You could certainly buy it based on another methodology, and even one of those methodologies potentially is an early indication entry is going from a hold back to a buy. So that's what that hold range is for. It's kind of designed to be a breathing location to say, we're transitioning, we're shifting. Let's be aware that this trend, we had been a pretty solid downtrend right here, and now that's starting to shift back this other direction. Let's pay attention to that. I could then easily add this to my watch list. So maybe I add it to the watch list. I come out, I will have created one. Okay, and let's add that in. I can add that and then go to my watch list from here. From here, what I could do is I've added Home Depot, and then I could add an alert to say, all right, when this thing does go from a hold to a buy, then I want to get an email alert that night. So if the signal were to change today, if it were to go from a hold to a buy today, and that were to then close in a new buy signal, and it had gone from hold to a buy, then you're going to get the alert to just as a reminder to say, hey, this stock has gone from a hold to a buy. If it's one that you're watching and waiting on, this is an example of one I would be watching and waiting on and saying, I'm going to wait for it to give me that confirmation buy signal. And then I can add it to a watch list and I can jump back in. That's the other process of add a watch list. If you're looking through charts during the day and you add it to the watch list, create a system each morning to where you're like, I'm going to go through, I'm going to double check my watch list. Oh yeah, I forgot about this one. Or, oh, I need to remove some of these out of the watch list that have not moved, or they're just starting, there's too many sell signals along the way here, and all I want are holds to buys. Whatever that process is, your watch list, it really is a great place to kind of keep an eye on what is setting up and stocks that you may want to own or to trade, but they're just not ready quite yet. And being able to do that, that's one way to be able to do that. So that's the ranking process. I'm kind of jumping around here a little bit because I want you to be real familiar with some of the locations of looking for some of these stocks. You're going to the index scan, then you can quickly say, I know, NASDAQ 100, I know those are typically tech stocks. They're big tech stocks. Of those 26 stocks, the 26 are the leading stocks. Okay? I'm not going to be interested in bullish long trades in this 42, and especially not this 18. I might be interested in the 18 if I'm looking for reversal possibilities, like something like this to say, this stock has been in a nice uptrend, it's retracing, and maybe it is bottoming out right here, and maybe there is an opportunity to at least pay attention as it's rounding the corner. Okay, and then you could say, it's not ready yet, but I'm going to keep an eye on it. So it's a quick way to be able to essentially to create a sorting process, a filtering process, to be able to say what range are stocks in. Are they in the hold range? Are they in the sell range, which is a downtrend, or are they in an uptrending range? Okay, now oftentimes, let's see if I can get an example here. Oftentimes you'll see that stocks typically are trending. Okay, you'll notice the number of times that there's yellow right here. Yellow, it barely goes to red. Then you have a lot of yellow right along here, some yellow and some red. But most of the time, in this case, it's an uptrend. The bulk of the uptrend is here. Okay, the move is here and the move is here. Okay, these areas that I've circled, those are the main areas that we want to be trying to capture. We want to be trading in a stock during those time frames. Okay, so we're going from we're typically entering from yellow to green, and then we typically will have some type of a trailing stop method like we talked about last week as it's climbing, because they don't all look like this. You know, as it's climbing higher, we'll typically have also kind of a trailing stop method along the way. You could just simply say, I'm just going to sell it when it hits a sell signal. But you know that once it starts to get to yellow, that the trend is at least slowing down. And that takes time. Okay, so here's an example. You have this amount of time in the uptrend, and you have this amount of time in the corrective non-trending move. And it's attempting in a bear market, then these reds are going to continue to the downside. In uptrending areas and uptrending markets, for a lot of times these are early entry, but we've also seen where stocks just completely fall off the table. So you're simply allowing and staying in a trade and in a trend as long as it's there. And they're going to come and go, and some may trend and some may not. But for the vast majority of stocks, this is what stocks do. This is what stocks are supposed to do. They're supposed to go like that. Okay. Sometimes they go like this and then come back and then they chop and then they go higher. Okay. Or if the company is in trouble or it's, whatever the case may be, you're going to have some red here. And so you're going to say, this thing is moving lower. And for whatever reason, this thing has become a dog and I don't want to touch it until it's starting to prove to me that it's coming back this direction. Okay. So in terms of creating a systematic process, stocks trend most of the time. They counter trend or pause or consolidate a lot less, but most of the gains are coming, the fastest ones are coming during those trending locations. Okay, even on this stock here, if we were just to use the buy and hold signals for the last year, I'm kind of curious on this and back test it. So what this back test is going to do is it's going to show us if we would have bought and sold every signal on that chart during that time frame, then in this case we would have made 32% gross. Each trade would have been about 9% winners, 55% win rate. That's pretty conservative. The drawdowns are not bad, but that's 2 years for that stock, and that may be characteristics. Backtest gives us characteristics of a stock during its trading cycle. So we may see, okay, we know that these returns are not bad, but there's just not a lot of volatility there. Over this last couple of years, every time we get a signal, it's up 3, 4, 5, 6, 13%, 7%, 12%. And the retracements are pretty shallow as well, 2, 3, 4, 5, 6% as well. That is just focusing on just simply on the pattern itself. But in the trending and non-trending, when we're talking about momentum and we're talking about breakout trading, or we're talking about stocks that are moving to new highs, this is the area that we're focused on, that 2-year time frame. I usually use the 6-month time frame just so that it's consistent in the entry, because the 6-month time frame turns into the 1 year and turns into the 2-year over time. So we're zoomed in a little bit for the analysis and the establishment of getting a trade set up. Let's see. I'm going to actually, what time we got? We got a few more minutes here. Targeting. We were going to talk a little bit about taking profits. Let's talk about that just briefly here as well. Now, let's use this stock as an example to say, let me just refresh here. And if we were to go back, let me go back a year. Let me just squeeze this over just a minute right here. Okay, now one of the processes in momentum trades is, let's say that we bought this breakout bar right here. We had our initial stop right here, down below this 236 zone. It's starting to move higher. Okay, as it's moving higher, we can do several different things. we typically will take profits based on the size of the allocation that it's becoming inside of a portfolio. So what I mean by that is if this stock is going higher, 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 and continuing to move higher, and now this point right here is our entry point right here. Okay, remember from last time, we're trailing the stop loss so that we're giving it plenty of room to keep moving to the upside, but we're going to allow it to move to the downside a little bit. Well, what if I'm in a market where I just want to capture more gains a little bit sooner? Okay, one of the things you can do is selling into the strength of that move by the percentage allocation that it's becoming. As an example, USAP. So we have USAP right now in the portfolio. We bought it, I believe, somewhere around back here. Okay, and so it's continually just moving higher. Now, if we go to the portfolio and say we've got USAP, it's up 45%. So that initial, and it's also starting to make up. Right now, it's about 3.7%, almost 4%. Not almost, but it's at 3.74% allocation. Typically, we start out with 2% allocation. So now this is almost double the allocation that we started out with. So if I wanted to rebalance my winners, then what I need to do is I need to sell a portion of that. I don't want to sell everything into the strength. You certainly can, again, if that's in your trading plan, and say, all right, I'm only going to hold it for 3 or 4 days. I'm going to take whatever profit I have, or what selling something into the strength. And this is one method that you can utilize, and that is just sell to rebalance your portfolio position. So we have 1,425 gains. We could sell all of those gains and then just keep the same number of allocation that we have. What that's going to do is it's going to allow us right now to realize some of the gains, and by taking that, by selling that 100 or whatever it was, $1,400 of gains that we have, it kind of resets us back to that $2,000 or 2% allocation that we started out with. Okay, and it moves this money back over into that cash pool to allow us to take this money now and go into a new trade tomorrow, or potentially move that money into something that, instead of maybe towards the ending of the trend cycle, maybe a little bit earlier in that trend cycle. Okay, so the selling is not about hitting a target and selling. It's about adjusting the amount of the size of the position that you currently have within the portfolio. If this stock had gone up, 500%, then we are selling along the way and then just rebalancing that. And eventually, at some point, the entire position that's left over is going to retrace and is going to stop out and be able to close out the entire position. So that's one approach, is selling into the strength as the position gets a little bit larger and holding on to the remaining shares, just selling off the gains, redeploying the gains, putting them in cash, but redeploying the gains back into new trades. Sometimes the hard or frustrating part with that is, this is the one that's working. Okay, why not continue to let it work? Well, you can, and you certainly should, but sometimes that when it retraces and you haven't taken some of the gains, and you have a really large position now, maybe this overall position got up to 4 or 5%, and if you had a pretty quick retracement or something happened and the stock sold off and you ended up having a stop out or something nasty, that's a pretty big hit. And that's what we don't want to have happen. Is we want to just continue to manage the risk across the board, so that one big loser is not going to really hurt us. It always hurts, but we just, Murphy's law, anything that can happen will happen. And it's the same in a stock trading portfolio. If it can happen, it will happen at some point in your trading career, whether it's a massive gap to the upside or a massive gap to the downside. And we've experienced both of those this year so far. And it's been so far, it's been a little bit tougher year this year, because we're topping out. We're kind of shifting. We've seen oil stocks and gold stocks rally. We've seen tech stocks and AI stocks get completely obliterated, and now starting to find some support again. So now we've got interest rates. The market's trying to decide, hey, what is what's the future look like, and where are some of these names that are going to produce going forward. So one of the approaches that we can follow is to continue to look for these stocks that are moving higher, continuing to move higher, and jumping on board some of those as they continue to move higher. Some are going to work, some are not. That's our job, is to go through and build out portfolios based on some of these names. I'm going to end on that note, and I appreciate everyone's time and effort today. We will see you all next time. Have a great weekend. Bye now.